Market Outlook, Calendar, Week 44. Calendar. Week 43 was a period of declining risk appetite alongside a stable underlying demand for digital assets. After a strong start to October, momentum cooled. The market moved sideways to slightly lower. Brief spikes occurred mainly around data windows and in thin order books. Real interest rates, the dollar path, and financing conditions set the pace. The fear and greed index slipped into the fear range, while BTC dominance held in the high 50s. This is the classic mode of selective rotations. Capital remains in core beta, BTC, partly ETH, while altcoins react more sensitively to headlines and liquidity. From a macro perspective, CW43 presented a mixed picture. Inflation pressures eased in some segments, US activity remained robust, and Europe and Asia sent mixed signals. For digital assets, what matters is how expectations around rates, liquidity, and risk premia shift. Higher real yields dampen valuations. Easing in prices and wages raises the willingness to take risk. This interplay lifted volatility without forcing a trend reversal. Against this backdrop, Quantum issued no research signals in CW43 and deliberately stayed on the sidelines. The reason is strategic. Our setups require clear conditions, either coherent trend momentum with market breadth, or clean, mean reversion windows with a calculable risk-reward. Neither was more than temporary. A dense events calendar also increases the risk of false breakouts when order flow runs into thin areas ahead of data. Discipline protects capital better than activity for its own sake. We do not act just to be in. We act when the relationship of liquidity, signal quality, and risk costs aligns. Outlook for CW44. The focus is the FOMC meeting, 28th to 29th of October. Wording on data dependence, references to financing conditions, and the tone on inflation are potential volatility triggers, especially for BTC ETH via the USD and real rate channel. On the 30th of October comes US GDP advance. On the 31st of October, US PCE as the core inflation gauge. In parallel, Eurozone flash HICP and Chinese PMIs arrive. The BOJ, 29 to 30th of October, can indirectly influence the global risk architecture through rate and currency signals. For crypto, sentiment-driven moves are likely. Direct correlations emerge mainly if data visibly shift expectations for the rate peak, balance sheet risks, or the USD trend. Altcoins retain a wide reaction band. Positive surprises carry selectively, negatives hit harder. We expect event-proximate volatility with jump points around FOMC, GDP, and PCE. A moderate FOMC tone and inline PCE would support risk appetite. A hawkish tone, or hotter, price impulses would weigh on it. The real rates versus USD relationship remains the near-term compass for core beta. BTC dominance is likely to stay elevated as long as market breadth does not visibly expand. We will keep research signals reduced until after the primary events. Swing setups with clear triggers have priority. Intraday only with sufficient liquidity and clean exits. BTC ETH remain the first activation candidates. Alt exposures only selectively and only with aligned flows, order book / derivatives / spot, and acceptable slippage. Risk management, conservative position sizes, hard stops, re-entries over averaging down, quality over quantity. If trendability re-emerges after PCE, we will increase cadence step by step. Microstructure, fear and greed in fear, implies asymmetric rebounds are possible, yet false signals persist in thin liquidity. BTC dominance around ~58% points to core beta preference. True alt breadth requires, in addition to macro relief, clear capital inflows into the periphery. Token unlocks in CW44 appear dispersed and moderate. We expect systemic impulses primarily from macro releases. Conclusion: CW44 is a macro key week. we remain calm, methodical, and strictly risk-oriented. Activation only where structure, liquidity, and timing intersect. Discipline protects drawdown and keeps us ready when quality opportunities emerge. This text is not investment advice, not a solicitation to buy or sell financial instruments, and contains no price forecasts. It describes our internal research environment and market observations. Past performance is not a reliable indicator of future results. Trading digital assets involves significant risks, up to total loss. This material serves solely to inform about our research processes and does not replace individual advice or independent risk assessment. Quantum data analytics, analytical, strategic, innovative,